I give thoughts in three categories: Bitcoin, the macro economy, and then the crypto or micro economy of crypto. And so if I start with Bitcoin, the first observation is I'm not a trader. I think that you need to be a professional proprietary trader to have a short time horizon. So I don't really think anybody should buy it unless you have a 4-year time frame. And I'm hoping that you want to own it forever. I think that Bitcoin is one of those forever assets, like the family farm, or like a trophy. You know, if you bought like the New England Patriots or a soccer team, you know, you want to give it to your heirs. So I have a lot of opinions about the long term, 4 years to 10 years out. I don't have any particular useful advice over the next 4 weeks, you know, and I'm not a technical person. So, and I hear all sorts of things, so we can talk about it, but that's just what I hear in the market. And I'll have a lot more to say on Bitcoin in a moment, but I'm going to leave it at that. With regard to the macro economy, the entire global economy peaked in January of 2020. I think if I think about January 1st, like New Year's of 2020, just before, you know, we got hit with COVID, and I think about how the world worked, you know, the concert business was raging and travel was raging, and the airlines were working smoothly, and the hotels were on fire, and small businesses were on fire, and there was entrepreneurialism everywhere, and an explosion of yoga studios and specialty everything. I think we kind of hit the peak of this entire business cycle then. Everybody was able to go about their business unfettered. We had a little bit of monetary inflation in the system, and so it wasn't like things were perfect. They weren't perfect, but you know, compared to what came in the next 2 years, you know, which is just unprecedented government intervention in every aspect of our lives. If I go back to January, and I just picked like January 1st, 2020, while we were still innocent and before COVID hit, and then the war on currency hit, et cetera. And then you go forward to today, and I look at what happened. Well, the money supply, the M2 money supply of the US dollar expanded, by my chart, 41%. We expanded the money supply about 41%. Now, how did all the assets behave? Well, gold is up 20% since that day. So gold captured half the money supply expansion. It didn't track the money supply. What did track the money supply? US single family homes up 46%. You know, we all know the story of home prices exploding. So single family homes slightly outpaced that money supply. NASDAQ, the index, 19% from that date. Up 20%, but the money supply is up 40%. The S&P index up 13% from that date. Bitcoin up 185% from that date. So, you know, and if you picked a broad commodity index, I think the commodity index up double the U.S. home. So you would have beat the money supply slightly with desirable real estate. You would have beat it with commodities. You beat it with Bitcoin, which is like a basically synthetic digital commodity, but it's scarcity. You wouldn't beat it with gold. You wouldn't beat it with NASDAQ stocks. You wouldn't beat it with the S&P index. And so, you know, you could roll the clock forward. You can roll it to August 10th, 2020. That's the date that my company bought $250 million worth of Bitcoin. And so people knew who I was on that date, and we made a macroeconomic commitment. Now, if you look at the macro numbers from August 10th, if we had bet 250 million on Bitcoin, 250 million on gold, it would have been down 10%. Gold is down 10% since August 10th, 2010. So gold got a boost in the first part of the crisis, but then it kind of flagged. NASDAQ is like flat, minus 1%, 0%, went nowhere for the entire 18 months. The S&P slightly up 11%. Single family homes up 26%. The money supply up about 20%, maybe 25%, depending on how you count it. So again, single family homes tracking the money supply. Bitcoin, even as it's been thrashed right and left, up 86%. So if your time horizon is less than a year, you're a trader. Even if it's less than 2 years, you're sort of a trader. And if you're a trader, you can be right or wrong about anything in that 18-month time frame. You know, you could have said you're an idiot not to buy Amazon stock when it was whatever, and you're an idiot not to have sold it after it doubled, and you're an idiot not to have, right? You can just drive yourself crazy if you're a trader. But what I can say is if you're an investor, you kind of got to have a 4-year time horizon or longer. And if you're a saver, you're a 10-year time horizon or longer. So I think the macroeconomic environment was strap in for a wild ride. And that was like a given as of March 15th, 2020. Around March 15th, Sven, I think the 30-year yield was maybe 1% for the US bond. The swap rates were 72 basis points. So the 30-year swap was 72 basis points. And I remember it vividly because I entered into a trade for 72 basis points because I thought, why not? Now, if you look at the way that that's moved, it's just been a roller coaster ride. But you would know that, if a reasonable price for 30-year money was 4% or 3.5%, and if the swap rates were 72 basis points, there's going to be hell to pay, as we come out of that, in essence, free money environment. And the only question is what's going to happen, and it's flopping all over the place. The 2-year swap rate is 358 basis points. So we've got basically interest rates have been jacked on the 2 years of the 1 years from 0 to 360 basis points. The yield curve is flat. It's worse than flat. It's inverted. There's yield curve control, right, in Japan, where they're pegged at 25 basis points. And if we, look at these currencies, right, and what's going on with them and what's going on with the bonds, well, look, just the currencies year to date, my charts say the dollar strengthened against the yen 17%, against the pound 10%, against the euro 7%, against the franc 5%. These are massive moves, So macroeconomically, if you're looking for any good idea with a time horizon of less than 2 or 3 years, even 4 years, you're just a trader. And the combination of low interest rates, which have kind of demonetized the sovereign debt, and then the excessive intervention means that free market scrambling to monetize something else. We're monetizing Rolex watches and luxury cars, and we're monetizing investment properties, and we monetize meme stocks, and we monetized random crypto, assets and the like. And the problem with having 100 forms of money or 1,000 forms of money is this cross-border problem, right? Like, do you really want to pay for your milkshake with Shibcoin, right? Or with your investment property on the lake or something? Not really. It's very inefficient when you have a breakdown of the money system. And the other problem with it is that it kind of puts the Fed and puts the central bankers in control of the pricing of every asset, right? What you really want is for them to just set a fair rate and get out of the way and stop, right? Right? Like you can make an argument that pretty much all the economic distress in the past 2 years is just due to well-meaning people trying to help, right? Like, we're from the government, we're here to help, and right? And everything they do makes it worse. We're in a macroeconomic roller coaster. We've always had a macroeconomic roller coaster. On CNBC today, they noted the correlation between, I think it was the S&P and the Fed balance sheet as being like 98%. Like central bank balance sheets are very correlated to equity values. And so when the central bank wants to expand the balance sheet, equity values will expand. When they want to contract the balance sheet, equity values will contract. That's the first order effect. The second order effect is choosing the right stocks, right? Or choosing the right assets. And so if your time horizon is less than 3 or 4, let's say 4 years, the Fed is the primary driver, and the old phrase, you can't fight the Fed, comes into being. If your time horizon is 10 years, then you can take a deep breath and you can ask yourself the question, when the sound and fury passes, and when we move on to the other side, what do you want to own? Companies that have more power than governments. A Google or an Apple, right, probably has more power than 175 governments in the world. They will probably outlast the currencies of all those governments, right? I mean, and they have pricing power, and they have massive leverage. And if I gave you $500 billion and I said, replace Apple, build your own Apple, your own iOS, right? You probably couldn't do it for $1 trillion. If I gave you $1 trillion in cash in today's terms and said, replace Apple's franchise, it's not clear that you could rebuild that tech stack. And likewise, if I stacked a huge amount of money and said, replace Google, it's just not clear. Can you replace Google and YouTube and the network effect with 500 billion? Now, so there are certain things you want to own through turbulent times. Monopolies. You want to own something very scarce and desirable. So if you look at the crypto universe, the idea of crypto is to have some kind of property that's in lieu of a currency or in lieu of a commodity. There's 19,920 cryptos, according to CoinMarketCap. One of them amounts to about half of that market cap. That's Bitcoin. So there's one thing that had a fair distribution, an ethical distribution. It's been deemed universally as a commodity. There is no issuer. There's no management team. Satoshi's gone. There's no the protocol was set at version 0.1, not change, right? 21 million, 1 megabyte block size, 10 minutes a block. The mining rewards were set until the year 2140, right? Everything is set for the next 120 years. A commodity is something without an issuer. There's no issuer of gold or corn or soybeans or timber or Bitcoin. A commodity is a much higher form of property than a security. A security has an issuer. The highest form of security, if you must own a security, is own Apple or Google or Microsoft, because they are transnational, publicly traded monopolies that have a very mature management team, mature governance structures. They are embedded in the middle of 100 million corporations, right? It's kind of hard to see how you rip them out if you must own a security, but they're still inferior to a commodity, or in this case, Bitcoin is better than a commodity. It has the legal, ethical standing of a commodity, no issuer. It's universally useful, right? But it is a scarcity because there's only 21 million. And if you look at my Twitter feed today, I posted an interesting video of the Uganda gold find, where they found enough gold ore in Uganda to create 330,000 tons of gold. Gold's the king commodity, and it's the highest stock to flow, but it's still just a commodity, and it's infinite. You can make more in human ingenuity, and given a high enough price, or if I increase the price by a factor of 10, You get a lot of incentive to turn that ore into refined gold. And the same is the problem with oil, natural gas, soybeans, corn, steel, lumber, the like, even real estate. Real estate's valued based on the square foot. And so you got 1 million square feet of commercial real estate. How scarce is that? Well, it's scarce until I create 10 million more square feet of commercial real estate, and it's less scarce. And so if you look at this in that way, what you realize is there's one digital commodity that is a scarcity. And if you have a long time horizon, if you're willing to wait a decade, if you're willing to live, if you're willing to be beat this way and that, tossed on the stormy seas of fate by the monetary winds that blow, they will blow in your face, they will blow to your back, and if you're going to, stand on the deck or lash yourself to the deck and you're prepared for a very rough journey, you should be able to make it to the promised land. A rational strategy is dollar cost averaging into scarce, desirable assets that, someone that's more affluent and more informed than you will want to buy from you in a decade. So if I was trying to come up with a plan to manage through the chaos, like I don't know that I could time the market. I think that I would just kind of dollar cost average my cash flows into a portfolio of property that was scarce, that was desirable, that would hold its value. And with the caveat that I need to be able to afford to maintain it. So if I could buy high quality property that I can afford to maintain for a decade, then as cash flows arrive, I would just allocate accordingly. And if you like Bitcoin, then Bitcoin, just dollar cost averaging into Bitcoin is a similar thing to that and rational. I think if you look at the 4-year simple moving average of Bitcoin, it kind of reflects something synonymous to the book value of the network, because for 1,458 days, that number reflects the trading volume or the trading price of Bitcoin. So it's traded billions of dollars a day, 1,458 times. And so by the time you calculate that number, it typically lags the overall price, but it's gone up consistently for the history of the asset, for obvious reason. And right now, that number is, as of today, it's 21,705. So 21,000 and change. So Bitcoin is kind of touching that number.
Well, that's good.
And if you're a dollar cost averager or a conservative Bitcoin investor, I think that you would look at that and think, for obvious reason, Bitcoin hasn't looked this cheap since March 20th of 2020. Like that was the last time when it touched this. And then you got to go back to like February of 2019. And then you got to go all the way back to 2015. So Bitcoin looks like a volatile risk asset in the near term. And if your time frame is near term, if it's a high frequency time frame, then you kind of got to trade Bitcoin like a high volatility risk asset, or an amped up risk asset. And if you're a low frequency, long-term trader, if you're buying it with expectation that a decade from now, it'll be worth more. Now it starts to look like a store of value, non-risk asset, because there's no management team, there's no product cycle, there's no employee base, there's no competitors. It's not a company. It's got no nexus. It's not in a country. It's not land. You can't produce more of it. It's a different thing.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.